Hey guys, this is Anudeep here, and we're gonna do a post-market analysis for 13th 1 2025. I did a pre-market analysis video in that I did the right analysis, but gold I had told we might be bullish, but gold ended up selling up a lot. And see, sometimes actually what I thought was, since BTC and indices were very bearish, it was bearish, it went down during Asian London session, but gold, it should have gone up when indices and BTC goes up, but it didn't follow that structure. It didn't follow that inverse correlation, or so in the markets there is nothing called as certainty. There is nothing like this is gonna happen this time. At its purest form, the markets are always uncertain, and the strategy you're using, if it is highly adaptable as possible, then you will do well. Or, like, I want to tell you a story. I think in 1970s there was a trader called Richard Dennis, who was also a mathematician. So he used a system called as turtle trading, or a system based on trend following. So what this guy usually does is, you choose the direction of the market, and then you keep adding to the position in the same direction. Let's say the market keeps creating rejection at certain levels. You don't keep buying and selling in that range. What you do is, you choose a direction and you keep selling at wherever it makes resistance, and you hold the position until it breaks certain level. And this mainly teaches you also to hold your trades longer, because one thing I've noticed is market always, it creates this wave patterns. Some call it Elliott waves, or Wyckoff theory, you can use whatever. And then it after it creates a lot of waves, it usually moves in one direction during the engagement of institutional orders, which will be around the London session and New York session. Mostly the volume comes in. So let's go to the post-market analysis now. So let's apply what I just said in the charts. So we'll look at gold. Gold is very choppy. It is the most choppiest asset you can probably trade. And you can see, let's go to yesterday. See, so as you can see, we created a lot of chops first, in the 15 minutes, and then around 12, which was peak early London European session, we started dropping. We dropped all the way to extreme levels. Even if we use 15 minutes for analysis, I think it is kind of pointless. It's good for entry, both 1 and 15 minutes. It's not, you already have to pick the direction on a higher time frame, at least 1 or 4 hour. 4 hour is the best. So if you see the 4 hours, see, around 11:30 we had like a rejection candle. We closed bearish, and then from 15:30 we had pure volume coming in the market. Let's drill this down to 15. Okay, now let's see if pivot gave any signal. pivot gave signal yesterday itself in the night, but not over here. But as you can see, it was creating rejection. This was first buy, again sell, sorry. You could have placed a sell here and then sell again here, keep trading in the same direction, sell, sell, sell. Then finally when the market goes off down, you'll make a handsome sum of money. And this is all about a game of patience. And I think this way of trading, where you keep adding position in one direction, it teaches you patience. Because what happens is, when you keep trading both sides in the short term, you end up getting chopped. And I've seen this happen to myself a lot of times. So whatever I'm making a video right now, it's like a journal. It's a reprogramming, recorrective journal, which even you can keep. I think this is the best way to trade, because no one else can teach you your psychology better than you do. And I've been in this game for so many years, but there's no certainty in trading. It's uncertain. You have to keep monitoring your own self. So if we kept selling around these positions, I think we would have made close to 337 points. That's $300 with a 0.10 lot. And and I think we went down all the way for a very long time. And around after the American market close, we started bouncing back up. So in a way, the whole day we were trending down for gold. I thought it was gonna go up, but see, gold is always unpredictable. It's very highly unlikely. And I think the daily candle serves a good purpose, because when I saw the first 4-hour candle, it was bearish. And when I clicked on the daily for yesterday, it was somewhat here, like around these levels it was trading. So it was bearish, but I thought it's gonna push up higher, since previous daily structures were bullish. But since it was a new candle, I think we have been creating a major pullback sort of. So yeah. Another thing is, during Asian session, I think the market is very consolidating. It's choppy. It's you cannot trade a bias and choose a direction. You have to wait for London or New York for the bigger moves to arrive. You can keep adding position in one direction, but yeah, that's it. So this is gold for yesterday's. Now I think let's go to BTC. So just a second, guys. So this is the BTC chart, and we can see BTC. It's BTC. I did a proper prediction where I said that we're gonna go down, and we did go down, but we pushed back up yesterday during New York. So here, 9:30, we had like a fresh candle open, and we came up to the rejection point. I had put a line here, blue line, so we hit that, and then we went down straight ahead, and it was approximately 555 points, a 555 point move, which is pretty insane. 542. So see, this is the thing, we kept swinging in one direction, and I think even the pivots sort of gave a signal. If I check here, so yeah, here around 10 we got a signal, we went down straight ahead, and in 1 minute So since here, yeah, 9, see, we had a signal here. We could have simply held a position, then again at the next 4-hour candle open we got a sell signal, take another position and just hold, ride the trend, and during the final candle open also we got a sell signal. Let's see what 4-hour candle, final 4-hour candle did. Yeah, it went down and then it pushed back up. So yeah, till 8, for 1 hour it went down. It was the final move down. So usually there are 3 moves that is happening in the market, and I think it was the third move which completely pushed the market lower. That was the final swing, and around 8 during New York we pushed back up, we created a support, we kept, see, you can see, then we started swinging back up. So every dip you could have added your position, because the structure hasn't broken. It keeps, it keeps the structure in one direction when it's swinging. So keep adding the position and then boom, it goes up. And next you get 2 more buy signals, you add your position and then you hold, boom, the market goes up. So I think this is the strategy we can be using. And let's check the daily today. I think today it looks very bullish. I'm not sure if we are gonna swing lower. We might pull up some liquidity, create more support, I think, before we sort of climb back up a little. So yeah, this is it. Gold seems to be pushing lower. Let's go to Nasdaq, and Nasdaq followed the same routine as BTC. The indices are somewhat correlated. We went down through Asian London session and then we bounced back up during New York, and then we caught a trend and we went one directional. So this is the analysis, and I think around certain period of the time there is, you can take a trade. But I feel it's better to stick to one system and follow it rigorously, like the one I said, like the trend following. I think it helps you to trade better, because especially for me, my problem is over trading and impulsivity, and I am unable to hold my trades. So I think these 3 things can be killed with this one stone, which is basically buying the dip and holding your positions. If you know the direction which the market is going, instead of trading both direction, you'll be pretty much confused, and then the market swings in one direction. So it's better to just choose one direction and I think trade in that direction. That's it for this video, guys. So let's continue with the pre-market analysis video for 14th. This was for the 13th.